Hey guys, welcome to the Max Invest YouTube channel, and today we're going to be taking a look at Kogan stock. Now, Kogan is an e-commerce stock that is based in Australia and it is traded on the Australian Stock Exchange. So, at the beginning, we're going to look at understanding the business and seeing what Kogan actually is. Ruslan Kogan founded Kogan in 2006. It is an e-commerce company that is headquartered in Melbourne, and it is an only online business. That means there are no physical stores for Kogan. They are keeping everything entirely online, just like companies like Amazon do. Kogan has Kogan Marketplace and Kogan Retail, which offers a wide range of products that are delivered to consumers. You can get almost anything that you want from Kogan, and in time you'll be able to get basically everything you want from Kogan, as you can with companies like Amazon. Now, Kogan also owns Mighty Ape, which is New Zealand's biggest retailer, or one of New Zealand's biggest retailer, with about 800,000 customers. So Kogan is also based largely in New Zealand as well as Australia, which gives it a much bigger total addressable market. Kogan has 3 million active customers within Australia, which is a massive amount of people, and it's hoping to expand this active amount of customers and expand the amount these customers are spending on Kogan every year. Kogan was also just included into the ASX 200 about 2 or 3 months ago, which is a big milestone for the company, and it means indexes need to include Kogan in it and they need to buy Kogan shares, which should help push up the price. Kogan also has Kogan First, which is a subscription-based model, just like Amazon Prime, and it helps people get Kogan products for less amounts of money, and subscription-based models generally tend to do very well going into the future. As you can see, Kogan have a massive range of products. There's Kogan Retail and Kogan Marketplace. However, they have a ton of other products like Kogan Mobile, Kogan Internet, Kogan Insurance, Kogan Health. They even have credit cards, and they even have Kogan Super. It doesn't matter if not all of these products work out very well, but if they hit a few of them really well and a few work out very well, they have a massive opportunity to expand and get a significant amount of revenue from these products. So far, not that many of these products have taken off really, and it's mainly Kogan Retail and Marketplace that have taken off. But in the future, if all of these do well and take off, Kogan has a massive opportunity to grow their business significantly. Now let's take a look at Kogan's financials to see if the company is doing well financially and to see if it's worth an investment into. Kogan has had some massive growth this year. They have 51.7 million in adjusted EBITDA, which is quite good growth for the company, and they had year-on-year growth of 97.4% for gross sales, which took them up to about $700 million in gross sales, which is massive growth for the company, and growing at 100% year over year is extremely good. A lot of this was pushed by the pandemic, where people stayed at home and they bought a lot of products online. However, I do believe this can continue into the future. Also, they had a year-over-year increase in gross profit of 126.2%, which is obviously another massive and impressive increase. They had revenue of 414 million compared to 219 million the previous year, which of course is very good, and all of their profits and revenues do seem to be going very well. As we can see, Kogan has got some pretty good financials. Its PE ratio is currently around 30, as its stock price has dropped significantly in the past couple of months, and they have good statistics. Their current ratio is 2.32, which is very good. I generally look for over 1.5, so to see a current ratio this good is quite reassuring. The debt to equity ratio of 0 is 0.71, which means they have a very low chance of going bankrupt, which is also good. They do pay a dividend of 1.1%, and I'm honestly not sure why they bother to pay a dividend because they are a growing company. However, Australia's dividend system is so good that you tend to see nearly every company paying dividends with a dividend system this good, unlike in America. Now, their free cash flow, equity and earnings per share has been steadily growing over the years, and this is all very good signs for the company. Let's look at Kogan's future growth prospects. Kogan continues to expand product lines at a rapid rate, and this is increasing their total addressable market continually, which is very good for the company, of course. It has a steadily declining cost of logistics and delivery, which will positively affect their gross profit. And it has had some insane past growth. However, despite this insane past growth, it looks like it can continue to grow. Global e-commerce sales will grow from 2.8 trillion in 2018 to 4.5 trillion in 2021. And Australia still has a very low e-commerce penetration. Currently, we're selling roughly about 10% of goods sold are through e-commerce. In China, this number's more like 40%, and in the US, this number's more like 20%. Australia has a lot of room to catch up to all of these other countries in e-commerce sales, and currently, it is not doing that much in e-commerce sales. Kogan is a business that has been growing at 100% in previous years, year over year, and this is due to more and more e-commerce sales coming about, and I wouldn't be surprised to see similar growth in e-commerce sales in Australia and in Kogan over the next few years. Now, as I've already said, Kogan was founded by Ruslan Kogan, and he has been the CEO since inception. His net worth is entirely made up of Kogan, and he owns a significant stake in the company of over 10%. He was named one of the top 100 most influential individuals. And as we can see in the bottom of the screen, the CFO and CEO of Kogan have recently sold a significant amount of shares. This is probably due to the share price going very high and them deciding to take some profits and take some of their net worth out of the businesses. However, I have looked at interviews with the CEOs and the CFO, and they both have a lot of faith in Kogan over the long term, and I do think they are going to continue putting everything into the growth of Kogan, which is reassuring. Now, Kogan has some very stock standard risks, which all e-commerce companies do. They have a simple risk of competition. Obviously, the biggest competition right now is Amazon, which also has a massive presence in Australia, and there are likely to be more and more e-commerce companies popping up. As we can see, Temple and Webster and a whole bunch of other companies have recently popped up this year, same as Redbubble. Logistics and margin are obviously a big risk for Kogan, as with e-commerce companies, it's generally extremely expensive to operate. This is the same with Amazon and any e-commerce company in the world, and you can see that in the multiples Kogan trades at. Kogan has revenue of about 414 million, however the cost of revenue is about 300 million, whereas most companies the cost of revenue would not be this high, however it simply has to be this high in e-commerce companies, and it can be risky for profit. Another risk of Kogan is it is still a relatively new company. Kogan is only a $1 billion company, which does mean there are inherent risks associated with it not being that established yet. Now, is Kogan at fair value? Kogan was up near $25 recently and even higher than that a little bit before that. And Kogan has just been on a downward trend and really slided. It is now down to around $12 per share. Now, Kogan's valuation has slided so significantly after their earnings report at January, where they reported they'd had over 100% growth in customers, 100% growth in all of their numbers, and they beat expectations. However, the selling pressure was just too immense on Kogan and the stock was beaten down. I believe this was completely unreasonably beaten down. I don't really know why Kogan has been beaten down this much, and Kogan is currently trading at a very low amount for a company that's been growing at 100% year over year. So I would say right now, Kogan is extremely undervalued. I'd say Kogan's fair value right now is more closer to the $20 range. Anything above $20 and you should probably wait for a better price. But at the current prices of $12, I think it's very safe to say it is undervalued. Of course, if Kogan did not grow any more from here, it would not be undervalued. But I am coming from a point of saying e-commerce will continuously grow in Australia at a rapid rate, far more rapid than even what investors think at the tops of Kogan, and I could see this share price going up significantly in the next 5 to 10 years. So that brings us to the end of the video. If you like the video, like and subscribe, and thanks for watching. If you disagree with anything, please put it down in the comments. I would like to see it.